bank stock crash and how it could affect not only the rest of the stock market that we have posed here, the major stock ETFs and indices in front of you, everything from NASDAQ to S&P to Dow to Russell, and then KRE, that's the regional banking stock ETF. I want to dissect how the regional bank crisis that could turn into a full-blown crash any day now, how that would affect the rest of the stock market, but also how that would affect interest rates, how that would affect foreign exchange, and how that would affect pretty much every part of our economy here, because we actually have a fair amount of data. As you can see, this crisis has been going on for over a month. The news really breaking in the first couple of weeks of March. We're now in May. And so sufficient data, I think, to look at some of the trends and try to build out what could happen if this gets worse, because it's gotten worse the last couple of days here. It seemed like we were out of the woods, but I kept noting every time we would talk about this bank stock crisis on this program, every few days or so, it would be like, yeah, we're getting less news about it, but it's not like bank stocks bounced back at any point. They moved down 20 to 30% here. If you're looking at the ETF and some of the single names, down more than 50%. And even though some of the news, dissipated, some of the fear dissipated, they never bounced back. And so right now, as fearful as ever in this part of our economy. So let's dig into what this could mean, because you see here some downside in especially the Russell and the Dow Jones and the S&P 500, especially as the news came out. If you zero in on that early to mid-March, the middle of our chart here, you can see everything as the news broke of the Silicon Valley Bank and the other banks that might be affected by this. The major stock indices did move lower. They all moved lower to varying degrees. But what's interesting is the NASDAQ bounced back heavy, and actually since the outset of this crisis, technology stocks are performing positively, almost inverse of these banking stocks. And that made me want to dig a little bit deeper into some of the correlations and see what's really going on, and then maybe project out what could happen if regional bank stocks lose another 30, 40, 50%, as they already have here in the early part of 2023. Regional bank stocks have driven very strong correlations to the positive and negative. And what we've seen is that when bank stocks fall, financial stocks, as you might assume, and interest rates fall as well. That's essentially, you have fear in this one sector, and any of the sectors that are close to it, it's going to be, that fear is like, second tier financial stocks. And then next to that, kind of industrials and materials. That isn't good for what's not good for these regional banks, isn't good for those stocks either. But as you break out further and further to technology stocks, which are decently far away from banks and financials and everything else, the correlation has died off there. And you even saw, like I noted, NASDAQ performing positively since the outset of this crisis, and that's because that interest rate correlation that you're seeing there, the positive correlation between regional bank stocks and interest rates, thereby necessitating that when regional bank stocks fall, interest rates are also falling, that fear bleeding over into what the Fed might do with interest rates in the future and what have you. Tech stocks love that. And if there's a crisis going on in the stock market that isn't really pertaining to the day-to-day of Microsoft and Amazon, and it's not like what's bad for these regional bank stocks is what's bad for those technology stocks necessarily in a direct way, I would say. If that's going to bring down interest rates, technology stocks have actually really liked that. And what other markets have really liked that is gold and Japanese yen and Bitcoin. Gold and Japanese yen, traditional flight to quality markets. I'm not surprised, and you shouldn't be surprised to see that those are negatively correlated with the bank stocks here, that when those bank stocks are moving lower, and this week is a great example, gold back well above $2,000 as regional bank stocks are hitting new lows. Japanese yen as well, up 1.5%, huge move higher here today with regional bank stocks making new lows. And Bitcoin also finding some demand as a flight to quality from this traditional finance bank stock crisis here. And so there are the correlations. And from here, I wanted to, okay, we got some correlations. We've got some historical data since the start of this crisis in early March, how these markets have acted. Now let's project out what could happen if the regional bank crisis gets even worse. These bank stocks go from being down 20, 30, 40% to down another 50%. Because you can see here, since the start of the crisis, Bitcoin's up 20%, gold is up 10%, NASDAQ is up. I mean, 9% in a year is a great year for the stock market. NASDAQ, which is primarily technology stocks, up 9%, yen up 2%, which doesn't seem like a lot, but the Bank of Japan has not done the yen any favors recently. And so 2% higher in yen, they will take it. Russell down 9%. There's a fair amount of financial exposure in the Russell. And remember that that's smaller to mid cap stocks, and regional banks, guess what, are smaller to mid cap stocks there. So more exposure close to this regional bank crisis. Interest rates down 100 basis points, 1% since the start of this crisis. And regional banks themselves, just for good measure, down 35% here, looking at the ETF there. And of course, you can pull out some single names and look at some real crazy moves. But I wanted to take this data and those correlations from the last slide and project out if regional bank stocks got cut in half, they're down 35%. If they were to move lower another 50%, what would that mean for Bitcoin, which is right now around 30K, gold right now around 2,000, NASDAQ that is, in the 13 to 14 range, yen, which is up 2% this year, but still on its lows. What would this project out? And then also interest rates that have fallen from above 5% to closer to 4%. What would the economy look like if the regional bank sector fell another 50% here? And this is what we would get in terms of these major markets that we're looking at. We would see a gold market up. And remember, these are all theoretical values that I'm basing off of the historical performance here. But in this theoretical case study, you would see $2,300 gold. That would be all-time highs in gold. You'll remember that it was, I believe, just a few months after the outset of the pandemic that gold got up to $2,100. So $2,300 gold would be all-time highs since we have had publicly available data for gold being traded here. NASDAQ would get all the way back to close to 15,000. Now, that's not all-time highs in NASDAQ, but that's a decent way back close to those highs. You'll remember that 2022 was a rough year for technology stocks and the NASDAQ. And so if this regional bank crisis were to continue, get even worse, rates lower, and you see here the quote of interest rates going from where they were before this crisis at 5%, they are now around 4%, 2% lower in these regional bank stocks, would project to bring interest rates down below 3%. Technology stocks would love that, and that could bring that NASDAQ higher. Bitcoin could make it back to 36K in this scenario, and yen still not getting back to its prior glory, where it's been in the 80 or 90 cent handle, would only get back to 76 there, would cause some downside in the Russell to the tune of around 1,500, and the Dow. What's been interesting, the Dow and S&P have actually been mostly unchanged through all of this. But of course, these are theoretical values. And of course, these are all projections. And if the bank stocks were to fall 50% tomorrow, these numbers wouldn't necessarily come to fruition. Of course, the regional bank ETF would be at 1944 because that's the one direct assumption here. But what would be interesting is, what would it take for this regional bank stock crisis to essentially spread out beyond the finance sector? Like I talked about earlier, it's this fear is focused in this one sector, the next tier out being, bigger financial stocks that have also seen significant downside. The next stop from there being materials and industrials, more closely tied there. At some point, you would think that, at least I would think that, the crisis here in regional banks, if it were to get so bad in spread, bringing interest rates lower, even if it were to bring them down to 0%, theoretically, a very growth-oriented environment for technology stocks, the fear in general, I think, would at some point bleed over, and you wouldn't see necessarily in the extreme scenario of this, say regional bank stocks go to zero and interest rates go to zero, NASDAQ is just ripping through all-time highs. I at some point here in stock market crashes that we've seen in the past, at least, these correlations even between far out sectors like technology and finance, those correlations will get more positive, and what's fearful for regional banks will be fearful for tech. But that hasn't been the case so far, and definitely hasn't been the case for gold and Bitcoin as well. Two markets that are making highs for the last year plus worth of trading. I mean, you can, if you know what else is bringing these markets higher, please bring it to my attention. But from what I can tell, almost direct correlation between the highs in Bitcoin, highs in gold, and this crisis here. So we'll see if this is the low in regional bank stocks, they can pick back up, or if this is just a stop on the way to even lower prices in these bank stocks, potentially lower interest rates, lower prices for indices like the Russell, the Dow. We'll see about the S&P 500, but could project out to higher prices for the Japanese yen relative to USD, higher prices for Bitcoin, NASDAQ, and gold. We'll see how this potential crash evolves, but this would be the projection at the given moment.